Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really still pretty interesting case in the US. Certainly inflation is on a sort of downward path, and you would expect the Fed to leave rates on hold now at its September meeting. Well, as the Fed have come out and Fed Chair Powell have come out and sort of said, it really is data dependent. There is still some talk about a potential sort of rate hike in November. Well, what has been quite interesting, one of the major Wall Street investment banks has come out and reduced its recession sort of probability now down to around 15%. Which is obviously pretty low. You've got a pretty robust US economy, and it'll just be very interesting to see how it plays out towards year end. Now, certainly rates have nudged up a little bit in the US. 10 years sort of trading around sort of 426, 5 years sort of hovering around 5%. But what could be probably problematic is the fact that oil is increasing. And that obviously has some pretty major inflationary pressures. Well, on the bright side, there's a big IPO coming, the ARM IPO. That's going to be the biggest this year. And will potentially give a reasonable sort of gauge as to sort of the sort of appetite out there for sort of big tech, and potentially as well to a sort of clearer indication of how people feel the stock market might trade towards year end. Potentially sort of Chinese, sort of US relations have sort of worsened a little bit as well, with the Chinese government coming out and banning government employees from using iPhones. Also as well, Kim Jong-un has travelled to Russia to meet up with Vladimir Putin. And just on the Russian-Ukraine war, the G20 met at the weekend, and they issued a sort of a very watered-down sort of condemnation of sort of aggression against other countries, but sort of failed to name Russia. But as the meeting was held in India, and India is a pretty major trading partner of Russia, it's probably not too surprising there. Now, I sort of mentioned, oil has traded higher again, and is currently trading a buck under $90 a barrel. It's quite ironic because the reasons for it trading high is that OPEC has come out and warned that potentially there's pretty tight supply out there. Which is quite ironic, really, because OPEC and the OPEC sort of plus countries, that includes Russia, sort of came out and failed to increase their supply productions. Yeah, in the UK having a minor sort of heat wave towards sort of mid-September here, and that's sort of adding just a further little bit of pressure out there on the economy. Now, in the EU region, core inflation is still around sort of 5.5%, which is pretty much as expected. Hasn't really come down too much more, but clearly is on a downward path over the last sort of 3 to 4 months. And again, given the fact that you're not seeing inflation increasing, you'd expect the ECB at its next meeting to leave rates on hold. Now, in Australia, you've still got a pretty strong jobs market. Latest data is expected out to show a further 40,000 jobs created in August. Now, that's really a pretty robust economy, and certainly the economy is showing some reasonable signs of sort of recovery out there. Inflation is nowhere near as high as its sort of global levels. But also as well, the housing market is starting to pick up as well, and tourists are still providing a major boost to the Australian economy. And given the measures that have been put in place in China and potentially the sort of forthcoming ones as well, the Australian economy looks in reasonable shape. Now here in New Zealand, we saw the sort of pre-budget government books opened up and explained, and really it painted a pretty dire picture. Looks like revenue is down by around $13 billion over the next sort of 4 years. And no matter how Grant Robertson, the finance minister, tries to spin that, saying New Zealand will avoid a recession because growth is expected to be plus 0.4% over the next sort of year. But what he failed to acknowledge is that New Zealand's already in recession, having seen 2 negative quarters. Although the credit ratings did leave New Zealand credit rating unchanged. But if you look at it on the latest polls, the government is really struggling now. It's down to around sort of 26% sort of popularity. National is just over 40%. And on the latest polls, National and ACT would have around 66 seats in the Parliament. Well, obviously, the key level there is 61 seats, so a comfortable majority. And with the election now just over a month away, it's really looking pretty tough going to see how the government can turn that around. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.